on September 26th. We actually got through our business in fairly short order this morning, and so we are on schedule. So thank you for all of those that are here today. I think, Pierre, you are up first, monsieur, to give us kind of the summary of the report. We're going to start with the residential property assessment report. And certainly the executive summary is what you can probably stick with, not the entirety. No, just kidding. And then we're pleased to have numerous folks from our Department of Revenue, including our director here, Director Henson. So thank you. So Pierre, please proceed.
Yep. Pierre Chenet with LSO. In the last meeting, the Management Audit Committee requested a scoping paper on the property tax assessment process, specifically on county assessors training and the interaction between the county assessors and State Board of Equalization. In this presentation, I'll provide an overview of the property tax assessment process by describing the role of county assessors, the Department of Revenue, county boards of equalization, and the State Board of Equalization. And I'll also explain the system of checks and balances that the system provides to ensure the uniformity of assessment in Wyoming. Before diving into the assessment process, let's recall the constitutional and statutory provisions regarding residential property evaluation. Article 15, Section 11 of the Wyoming Constitution provides that all property shall be uniformly valued at full value, which statutes define as fair market value. The Constitution also requires the legislature to prescribe the percentage for taxation within each property class. For residential properties, that percentage is 9.5%, meaning that for a property with a fair market value of $100,000, property taxes would be assessed on $9,500. Let's look at the Department of Revenue's role. Statutes require the Department of Revenue to prescribe by rules the appraisal methods for determining fair market value, using industry standard appraisal and statistical methods. In addition to rulemaking, the department must meet with the county assessor to monitor their work and ensure they comply with the department's procedures. Every year, the Department of Revenue audits every county assessor to monitor compliance with directives regarding valuation methodology and to monitor the use of the computer-assisted mass appraisal system, or CAMA system, which I'll explain later. Statutes also require the Department of Revenue to consult with the president of the Wyoming County Assessor Association to establish a training and education system for county assessors and establish criteria for certification. Wyoming statutes provides that county assessors may not exercise their duties unless certified by the department. However, a county assessor may exercise his or her duties without certification for one elected term and the remainder of an expired term to which she or he was appointed. Every year, the Property Tax Division Administrator develops a list of accredited courses with the president of the Wyoming County Assessor Association. And if you go to Appendix A of the paper, at the end of the paper, it provides the list for 2022. The department provides temporary and permanent certifications, and page 6 provides the requirements for both certifications. The department requires newly elected or appointed county assessors and appraisers to obtain temporary certification within 1 year and permanent certifications requirements within 6 years. And the department also provides requirements to maintain permanent certification. The legislature plays a role in providing training to county assessors as the legislature appropriates funds for tuition cost, books, and instructor expenses. Now that we have reviewed the role of the Department of Revenue in promulgating appraisal methods, monitoring county assessors, and developing education and training systems for county assessor, we'll now delve into the county assessor's role and specifically how county assessors conduct mass appraisals to determine the fair market value of residential properties. Mass appraisal is the process of valuing a group of properties as of a given date. To conduct a mass appraisal, every Wyoming County assessors follows industry standard and department prescribed data collection procedures, approaches to valuation, and statistical methods. To further standardize mass appraisal in Wyoming, every county assessor uses RealWare, the statewide computer-assisted mass appraisal or CAMAS system. The CAMAS system serves as a calculator and a data repository for all properties in Wyoming. And one of the critical aspects of mass appraisal is data collection. County assessors collect two types of data, sales data and cost data. Sales data contain information on property transactions, including the nature of the sale price, and the transacted property's characteristics. Cost data are information about a property's physical and structural characteristics and the typical replacement cost of these features. And there is more information available on the two types of data on pages 8 and 9. Data collection is a crucial part of mass appraisal, as the different approaches to valuation rely on accurate data to calculate property values. County assessors may use 3 different approaches to valuation, which I'll briefly describe. The first valuation method is the sales comparison approach, which estimates the property's value by analyzing comparable sales for comparable properties. This approach relies heavily on the availability of sales data. And if sales data is not available to the county assessor, the department recommends county assessors to use the cost approach. And the cost approach estimates value by summing the land value with the depreciated value of improvements that are on the lands. The third and last approach is the income approach. This approach estimates value by converting anticipated benefits from owning the property into an estimate of present value. However, county assessors rarely use that method because most residential properties do not generate income. And there is more information on the 3 approaches to valuation on pages 10 and 11. Another critical aspect of mass appraisal is stratification, which is the process by which county assessors sort properties into homogeneous groups. And the Department of Revenue lists 2 types of stratification groups: neighborhoods and land economic areas, or LEAs. In a mass appraisal context, a neighborhood is a geographic area composed of properties sharing physical, economic, governmental, or social characteristics. An LEA, or land economic area, is an area that may encompass a group of neighborhoods on the basis that the lands within the LEA's boundary are subject to the same economic forces determining land value within the area, such as geographic boundaries like a lake or a river, or political boundaries like a school district. And there is more information on stratification on pages 11 and 12. The next section I'll discuss starts on page 12 and ends on page 14 and covers how county assessor confirm the accuracy and uniformity of their assessment by performing sales ratio studies. Sales ratio studies examine whether the county assessor's appraised values match market values, which is the values at which properties sell. The Department of Revenue established 7 statistical standards county assessors use to perform sales ratio studies. And the paper goes over in detail for 3 of the standards, which are minimum sales sample size, appraisal uniformity, and the level of appraisal. And should a county assessor, after performing a sales ratio study, find their assessment to be out of compliance with statistical standards, the department provides remedial actions. After assessing property values and conducting sales ratio studies, county assessors submit assessment rules to their County Board of Commissioners, which in this instance acts as the County Board of Equalization. County Boards of Equalization, by statutes, must approve any corrected or valuation change contained in assessment rules and hear and decide on complaints from taxpayers. And we'll discuss complaints from taxpayers in the very last part of the presentation. And there is more information on the statutory duties of County Boards of Equalization on page 15. County assessors also submit assessment rules to the State Board of Equalization, whose constitutional duty is to equalize the valuation of all property in the counties. In addition, Wyoming statutes establish that the State Board of Equalization must examine, compare, and equalize county assessment rules to ensure that all taxable properties valued at fair market value. And to fulfill its requirements, the State Board of Equalization performs statistical analyses of each county's assessment rule using industry standard statistical methods. Should a county be in non-compliance with the State Board of Equalization standards, the State Board has a range of remedial actions it may impose on a county to bring it back into compliance. And there is more information on the State Board's procedures and remedial actions on pages 16 through 19. I'll conclude this presentation with an overview of the appeal process that is available to taxpayers wishing to contest their assessment. And Appendix D, which has been distributed to you, provides a flow chart of the appeal process. Wyoming statutes provide that any person may review his property tax assessment with the county assessor. During that meeting with the county assessor discloses the sales data he relied upon to determine the property's value. After meeting with the county assessor, the taxpayer may either pursue no further action or file an appeal, which leads to a meeting with the County Board of Equalization. At the hearing, the presumption is that the assessor's valuation is correct. So the burden to rebut the presumption is on the taxpayer. After the hearing, the County Board of Equalization may either affirm the assessor's valuation or side with the taxpayer and send the case back to the assessor for reassessment. The taxpayer and the county assessor may appeal the county board's decision to the State Board of Equalization. After a hearing with the State Board of Equalization, the State Board may either decide in favor of the taxpayer and send the appraisal back to the county assessor for reassessment, or side with the county assessor, in which case, or side with the taxpayer, or side with the county assessor, in which case the appraisal stands. The taxpayer and the county assessor, and not the county board as written in the paper, may appeal the State Board's decision to the district court in which the property is located. And with that, I'll stand for any questions.
So thank you, Pierre. Members of the committee, any immediate questions? I know this is a topic of interest for a variety of reasons. Obviously, we're not talking about some of the issues that the Revenue Committee is addressing right now as they're thinking about how to adjust assessed values or adjust, not the process. We're talking about the process here, not the baseline. So Representative Sherwood, did you have a question for Pierre?
Yes, thank you, Mr. Chairman. If you have any background on why the 30-day window was set, I'd be curious about that, but you may not. I just think I've heard from some constituents that maybe is not enough time to go through the process. Thank you.
Chairman Barlow,
Please
Representative
proceed.
Sherwood, I don't have an answer to that question, but maybe the Department of Revenue or the county assessors would be a better resource than I am on this.
So I think that's actually a statutory requirement, if I'm not mistaken. So if it's anybody's fault, it's ours, or the legislature's.
Mr. Chair.
I may be incorrect if it's not. Senator Garou.
Thank you.
Unknown caller.
I just have a question on page 221, first paragraph of the executive summary. 9.5% is assessed evaluation. Is that what I'm reading there?
I don't know what you're referring to.
I'm sorry, on the executive summary, page 2, paragraph 1. It says property taxes are assessed at 9.5% of property's fair market value. Am I reading that wrong, or is that correct?
That you are reading it accurately, and that is correct for residential properties, recalling that there are other properties, industrial
And
or
agricultural.
industrial and then minerals that are at different rates. So,
Okay.
but that is accurate.
Thank you, Mr. Chairman.
Any other questions from committee members? Questions for committee members? Pierre, thank you very much. This is very complete. We appreciate it. So I guess now we've got numerous folks here from Department of Revenue. Is there an assessor's representative? Yep, there we go, sorry. And we have our State Board of Equalization here. So would any of you folks like to approach the committee, visit with the committee about any of the process issues that may be helpful to adjust. You heard about the 30 days from Representative Sherwood. Are there other things in the process that you think would help both the taxpayer and in your respective roles in the process get better clarity and better understanding? So I'll invite you. If there's nothing, then it'll be a short conversation. We're going to move right along. But Director Henson,
Mr.
thank you.
Chairman,
Great to see you.
good to see you.
And we're not talking about monthly ad valorem.
We are not, but we can. Mr. Chairman, Brenda Henson, Director of the Department of Revenue. In response to Representative Sherwood's question, a little bit of history, but prior to going to fair market value in 1990, our assessment date was actually February 1st instead of January 1st. And our appeal dates were set in statute that the assessment schedules had to go out by X day, but then there was a date in statute. Instead of being a rolling date, it was just, all appeals must be filed by this day. And it was found during that time period when we converted to fair market value that a window of 30 days from the mail date on the assessment schedule provided a clearer guideline to those taxpayers. They felt that taxpayers sometimes just, didn't get in by the one date that was different every year. So since the 90s, that appeal date has been 30 days from the mail date on the assessment schedule. There has been historically discussions about should that change, should it be lengthened? But quite honestly, there's the tax calendar, and you'll see some of the assessor's duties related to the tax calendar. Should you change the appeal piece, it has a trickle-down effect. As stated, the statute requires that the property owner reach out to the assessor no later than 30 days after the mail date. But then the County Board of Equalization hears those cases, and their findings and facts are required to be completed no later than October 1st. Well, then you've got the appeal further, should it go to district court or the Supreme Court. But while all of that is going on, you still have budgeting, certification of assessed values, those types of things. And you'll find in the state board can respond to this when the county assessor provides the abstract of assessment rolls, and that's where the assessor tells the state board, I have X dollars in assessed value for residential land, X dollars for residential improvements. When they abstract all of that, there's also a page that asks about properties under appeal. They're interested in knowing of this taxable value, how much is still under appeal and not perhaps settled. So it's really just a window in time when the assessor provides the information to the state board and they certify those values. But all of the statutes related to the taxing entities that have the benefit of property tax dollars to fund services, everything's based on that certified value. So when they put their budget available to the public that says, I need X dollars, it's X dollars budget amount divided by the assessed value that was certified by the state board equals the mill levies. And then of course there's maximums. That is a long-winded story about how we got to a 30-day window. And the other piece of that would be that there was some questions, I believe it was about 2014, and the legislature at that point required the State Board of Equalization to promulgate rules that should be followed by all county boards of equalization in that process on how appeals should be handled, and they did so. And so now you've got uniform rules in all 23 counties related to that appeal process. And with that, I'd be happy to answer any questions that the committee may have.
Thank you, Director. Any questions? Representative Gray.
Thank you, Mr. Chairman. And one other comment on that note is we did have a bill in the Revenue Committee that would have moved it, I believe, to 45 days, and that failed on a tie vote to be sponsored by the committee. And then I brought it as an individual bill, but it was a budget session, so it wasn't brought forward for an introduction vote. you know, going through this, it reminds me a lot of what we discussed in 2021. You know, I guess looking at the process here, you know, I think there's a couple different things, the 30 days, but one of the big things we were trying to fix with that statute was having the LEAs released, you know, having the LEAs public, or at least so that the taxpayer, the appealer can look at the LEAs. Heck, you know, it would be great if the county commissioners could look at the LEAs. They've claimed to me, the Natrona County commissioners, that they're not able to see the LEAs when they're sitting as the County Board of Equalizations. So I guess my question is open-ended. Why are the LEAs not public? I mean, that just makes no sense to me. At least
Director
not
Henson?
open for taxpayers to see.
Director Henson, if you wish to respond to it, if you have a
Certainly.
response, please.
Chairman Barlow, Representative Gray, LEAs are public information. All information, everything that was utilized by the county assessor to determine the fair market value of residential property is available to the taxpayer. In some county assessors' offices, the maps are on the back. If you went down the hall, or excuse me, down the road, you would see neighborhood maps and LEA maps on the back wall in the county assessor's office. As far as having them shared, I think where the frustration lies in some instances is just the customer service piece. You know, how as a taxpayer, I'm not going to recognize that I even need to ask for a land economic area. That's not just something that would come to mind. But our statute does require that assessors provide a copy or a list of all the sales information that was used in appraising their property. And so within that process, when the taxpayer arrives at the county assessor's office, typically it's the first thing that happens in an assessor's office is to share all the sales information that was used in the analysis. They don't even have to file an appeal. All they have to do is go in and contest their assessment or question it. And that is a process. So I think the any shortcomings that a taxpayer may have had in acquiring that information, it was just a matter of timeliness of the customer service and perhaps the organizational structure of how that customer service was being delivered.
So, thank you. Do you have a follow-up, Representative Gray? Please.
Thank you, Mr. Chairman. I really do feel like I'm going back to 2021 here. I mean, we had this discussion a lot of times, and the issue is that, and I acknowledge that many county assessors do this, but at least in one case, which was Natrona County, we had a county assessor, and granted he's no longer gonna be county assessor in January, who believes vehemently that the statute does not require him to release the LEAs. And so I realize that many county assessors are doing that. I'm not sure it's all absent the Natrona. I wouldn't say one way or another, but there is one that is still in office who insisted that statute does not require him to do that. Thank you.
So I want to be clear. The LEAs are one component of it. The sales, are those also public then when in that comparison information?
Mr. Chairman, sales information are not public information. However, they are available to the taxpayer within that 30-day window. And I'd also like to state that that 30 days, it's just the requirement that the taxpayer notify the assessor. It isn't that there has to be any exchange of information during that 30-day window. It's just as long as they have a piece of paper that identifies why it is that they're contesting that assessment, that gets that appeal docketed. And then that exchange of information. In the big scheme of things, the idea is to share as much information as possible to ensure the property characteristics are right, everything's been considered. Is there something that the assessor may have overlooked? But the communication piece is really, when you stop and think about, you know, we've got approximately 600,000 parcels in the state of Wyoming, and the assessor, there's no way that the assessor or their staff can physically inspect every property every year. So if that assessment looks erroneous or just something doesn't look right, it really is incumbent on the taxpayer to contact the assessor and say, would you take another look? Here's what I think. And I always mention to taxpayers, your property, you have a ballpark idea what your property is worth. If it's not in the ballpark, reach out, get that conversation started. And I think for the most part, that process works. But these are elected officials in the county offices, and they are elected officials that are also getting legal advice from their local county attorney. So there's always going to be some nuances there.
Thank you. Further questions? Representative Brown.
Thank you, Mr. Chairman. Director Hanson, I have just been clicking back here trying to find it. I vaguely remember us having a bill in front of us, and I can't remember if it ever made it to the floor or not, but there was the appeal process, I believe, for the state to take it to district court, or the State Board of Equalization to appeal to district court. Can you remind me of where that was at or where that comes into place?
Director.
Mr. Chairman, Representative Brown, that was termed as county assessor standing historically. And what we've got is a situation right now where, so if the taxpayer appeals to the County Board of Equalization and whatever that decision is, that can go to the next level, the State Board of Equalization. The taxpayer can appeal if they did not win at the local level, and the assessor can appeal if they did not prevail at the local level. Now, once we get to the State Board of Equalization, if the State Board of Equalization finds for the county assessor, the taxpayer has the ability to appeal that further to the district court. Conversely, if the State Board of Equalization finds against the assessor, due to a court case several years ago, has been deemed not to be a person. And so, not because of statutory language per se, the courts have said the county assessor can't appeal a State Board of Equalization decision to a higher court because they're not a person. So even though it's their value that they're trying to defend, and they believe that it has a much broader bearing on taxation laws, they're stopped at that level. And it's only related to local assessments, those values that are determined by the county assessor and appealed to a County Board of Equalization. But it sometimes gets confused in that, as you know, the Department of Revenue has a list of types of properties that we value for property taxation. And appeals of those values start at the State Board of Equalization. And in some instances, it's deemed that county assessors are wanting the right to appeal a Department of Revenue appraised value. And that was not what that bill was trying to do. That did not pass. But it does kind of get confusing. You almost have to have that chart that says, here, if this happens, this can happen. If this doesn't happen, this can happen. But there you go. And you'll see at the bottom of that chart, at one point, it says the County Board of Equalization can appeal to the district court. Well, that's an interesting concept, because if the assessor is appealing the County Board of Equalization's decision in the first place because they don't feel it was appropriate, the odds of the County Board of Equalization appealing the state board that just affirmed their decision is probably not going to happen. It's only if the State Board of Equalization were to reverse the County Board of Equalization's decision, then the county board may take it further. But again, it's always the assessor's value, so it doesn't quite make sense that they don't have the ability to go to the same courts that a taxpayer does.
Thank you. Follow up, Representative Brown?
Just thank you, Mr. Chairman. I think I remember the bill. You said it did not pass, and I think we'll be able to get maybe a little bit more of this from the state board. But I'm curious on that, as you talked about the assessor not being quote unquote a person. In the courts, would they not just be an aggrieved party that would be able to take that forward? And so that's where the stoppage is that they don't have that right to appeal that, as they're not an aggrieved party?
Go ahead,
Okay.
Director.
Again, Mr. Chairman, Representative Brown, it wasn't a statutory, it was just a finding and facts. It related to a appeal case in Park County. Historically, if you want to look it up, it's TCI. And basically, they deemed that the Park County assessor did not have standing to appeal to the district court, and it was thrown out. And that's where the standing stopped for the county assessor.
Thank you. Further questions? Further questions for the Director? Representative Gray.
Thank you, Mr. Chairman. Ms. Henson, do you keep track of the sales ratios on when there is a sale, when there's churn, what the comparison was to the last assessment, to kind of track what that historical sales ratio would be within each county?
Director.
Mr. Chairman, Representative Gray, so the computer system mass appraisal system that all 23 county assessors use, we have access to all of the county's files. But our rules, be our Chapter 9 rules on statistical analysis, do require that the county assessors provide a stratification document to the county, or excuse me, to the Department of Revenue, at the same time that they're actually providing information to the State Board for the abstract. And so what we do is we look at their stratification document, we run a report that basically identifies any neighborhood or land economic area that does not have sufficient sales data. We also identify any neighborhood or land economic area that does not have a ratio or compliance of between 90% and 110% for each individual strata. And we share that with the county assessor. Now, we're providing guidance on that stratification, and we indicate that there are 4 ways for an assessor to expand stratification if they don't have sufficient sales, or if they're not in compliance, and how they can look at that again. So there is communication going on at that point. The State Board of Equalization's responsibility, however, is countywide. So they don't typically look at the individual stratifications. They're just looking countywide, residential improved, what was that overall ratio? And that needs to be pursuant to their rules, 95 to 105. So it's a different approach as far as what our rules are requiring of the assessor, and then what the State Board is.
Mr.
Okay,
Chairman.
thank you. Representative Gray,
Thank you,
follow up?
Mr. Chairman. It's 95 to 105 of what? Is it their view of what the sales price is, or is it the last time a sales price cleared in the last year compared to what the last assessment was?
Director Henson.
Mr. Chairman, so the 95 to 105%, when you're running the statistical analysis, what would happen is every property that's sold in the last calendar year. So if it's a 2022 assessment, you're looking at all the valid open market sales that occurred in that county during 2021. For every one of those sales, you compare what it sold for to the appraised value that the county assessor has. And you make that calculation on all the sales. Once you do that, then you array those sales from lowest ratio to highest ratio. And then the midpoint needs to be between 95 to 105%. So whatever that, it's an actual calculation of that midpoint sale. And so what that means is, let's say the median ratio for a county's residential improved property is 96.5. That means that half of the properties that sold that prior year were valued less than 96.5, and half the properties that sold are above that 96.5, because that's your midpoint, the median sales ratio. And that's the statistical analysis of mass appraisal, that those are industry accepted standards.
Okay, thank you. Representative Gray.
Thank you, Mr. Chairman. That really surprises me, and I understand now what that piece does. I guess I wasn't fully, I mean, you could have appreciation of much higher than 5%. So to require a previous assessment to be in a range of 5% within a year, I mean, am I still misunderstanding that? I mean, so let's say a house is valued at 100,000. okay, it turns the next year at 105,000, okay? I mean, that could have, that appreciation, it could be appreciating more than that a year, but it would still be at the 95% midpoint about. And that, from what I understand what you just said.
Go ahead.
Mr.
Director.
Chairman, Representative Gray, assessors don't look at the prior year value when they appraise property. So it has nothing to do with the prior year value. We start new every year. The property characteristics may stay the same, but the first step in the next year is to use those property characteristics to calculate a replacement cost new. And the CAMA system does that calculation for them. It takes into account labor costs, material costs the following year. So we always start with replacement cost new, then we've got another year's depreciation, then you've got a whole new set of sales data to use in your analysis to arrive at whatever market adjustments have to be determined to make sure that your properties are appraised at fair market value, consistent with the Department of Revenue rules and the state board rules. So never does an assessor adjust a prior year value based on sales. It's always a new appraisal year, every year, for every structure and every piece of land.
Okay, thank you. All right. Anything further, Director, that you can, besides
No.
the 30 days? Thank you for taking care of that.
And if something else comes up, I'd be happy to
right.
respond. Thank you.
So we have lots of other very knowledgeable folks here with the Laramie County Assessor. We have our State Board of Equalization Chairman and Vice Chairman, it looks like, in the back of the room. So anything you'd like to add to the conversation, or anything that's come up that you think we need more clarification with? Ken Guile, did you say that correctly?
Yes, Mr. Chairman, Ken
Great.
Gill, Laramie
Giel,
County
my
Assessor.
apologies.
No, you're
Great to have
fine.
you here.
It's a weird spelling, so.
No, that's right.
Mr. Chairman, I'm here attending to answer any questions that the committee could have. Really don't have anything to add to what Director Hansen said. I will, if I could, Mr. Chairman, respond to maybe Representative, one of his questions, if that
Yep,
would be.
Representative Gray, there's going to be maybe hopefully some more information from one of your questions.
So the 95 to 105 is the appraised value versus the sales price is really what it is. It has nothing to do, as Director Henson said, with the previous year value. So every year we calculate a new replacement cost, new less depreciation, and you'll find that in Pierre's document here. So that's the cost approach. And then we adjust that cost approach based upon the sales that happen within the given year. And once we've adjusted that, the sales ratio has to be a 95 to a 105 median. So either 5% over full fair market value of 100% or 5% lower. Hopefully that helps you with that.
Thank you. Representative Gray.
Thank you, Mr. Chairman. I really think I'm understanding more what happened in Natrona County, because you had an assessor that really wanted to hit that ratio. And some of the increases were so wild, because when it's a median, I mean, you could have 95%, you could have 50% way above what the median is. I mean, that's not telling you anything. I mean, if you had all the properties way above that median, that's not an assessor doing their job right. But they'd still be hitting that 95 to 105%. So, which, in talking with him, he was quite obsessed, he was quite into hitting. And so I think I understand a little more on some of the background on what happened, and I don't think that ratio makes sense, because if an assessor's, bread and butter target for the state board, which, I know that assessor wanted to, hit that bread and butter target, and it seems to be one of the big things they want to do, then there's an incentive there to increase 49+% of the properties to a point where you're going to be above the median. And if you're going way above the median, looking at the median doesn't account for that. And so it's a big problem. Anyway, thank you.
So first of all, any comment or clarification that needs to be added to that?
Absolutely, Mr. Chairman, if I could.
Please.
Great point. The median sale, the median number is one sale, right? So 50% of those sales that happened in that year are going to be below that median, 50% could be above that median. We also studied the coefficient of dispersion, not to get too deep in the weeds here, but the coefficient of dispersion shows us how close all of our appraisals are to that median. And the worse that number is on the coefficient of dispersion, which also is oversight by the State Board of Equalization, if that's a bad number, then yeah, that one sale, you're right, that 95 could be a very bad misleading median. But typically the assessor will want to keep that coefficient of dispersion very small so that he knows most of his appraised values are really near that median value.
Please, Representative Gray.
Thank you, Mr. Chairman. Mr. Gao, could you give a few examples of how is the coefficient dispersion calculated? Like maybe use round numbers, and so I can actually see how that works. Like,
Please.
so maybe like 100,000.
I won't probably get in, I'm sorry, Mr.
No,
Chairman.
please, go ahead.
Probably pretty deep in the weeds. It is a statistical, mathematical calculation that we do, and we have, yes, I can do it with a financial calculator. I'm not as good with the calculator as I am with our statistical packages that we use in our computer systems, but it is a pretty complicated number to get to.
Okay, thank you. Further questions? I do thank you for being here and for helping inform us. Any further questions? All right, thank you very much, sir.
Thank you, Mr. Chairman.
So now you're just waiting on the next year's work, right? Preparing for next year. The treasurers are going to do their job now, start collecting those assessments. All right. State Board of Equalization, we have, of course, I guess the vice chairman moved forward. Chairman stayed in her seat. I guess rank has its privilege. Thank you, former Senator and Representative Mockler, for being here. Mr. Hartzog, go ahead. Hartzog.
Good afternoon, Mr. Chairman, members of the committee. My name is Marty Hartzog. I'm vice chair this year. Just so you know, it kind of rotates, and the chairman's position is kind of a ministerial thing, so somebody can handle day to day. But I think next time it's my turn, and then the other member gets it after me. So I don't really have anything to add. I'm happy to answer questions. I will, though, supplement Director Henson's remarks concerning the assessor's appeal authority. It actually is a statute. What she's referring to is a case that kind of talked about it, but there's a statute that says that county officials are not persons. And so a taxpayer challenged the county assessor's ability to appeal, and that was the case that it first came out. And the court said that's what the statute says. I think it's in the WAPA, Wyoming Administrative Procedures Act. And so county assessors are not permitted to appeal, because they're not persons within that statute, from a Board of Equalization decision that aggrieves he or her. Now, there have been a number of bills that have come forward, because there are times when it's unfortunate that the assessor is not permitted to appeal to the district court. And in those cases, those bills have died. And I can tell you, because I actually used to review the bills when I was at the Attorney General's office, and we handled most of the bill reviews. Much of that angst is on the mineral side. The mineral industry would prefer that the assessors not be able to appeal from a board decision. And so there's been a fair amount of pushback when that type of bill has come out. So I think for the last, probably 20 years, I've seen a number of those bills where they sought to create standing for the county assessors to appeal, and they've all died. So, but other than that, I would stand for questions and be happy to answer any questions you have.
Okay, thank you. So I think this goes to part of thank you very much. What the director said was, the intent was for these bills to actually allow the assessor to appeal local assessment valuations, not things that the state Department of Revenue, i.e., was assessing. Would that be an accurate reflection of where maybe some of this miscommunication is coming from?
Well, on the county assessor appeal right, you have the personal property taxes that are equipment, and those are all local. So all of the compressors in the field, all of the heavy-duty operating equipment, those appeals from assessors, they don't have standing to go to the district court. But for the most part, for whatever reason, there's just been a general pushback against assessors having that authority. And you're right, where it really is unfortunate is on the local assessments with residential, they don't have authority. And it could also implicate exemptions. We have quite a number of exemption cases. Is the property taxable? If the assessor loses that in front of the board, has no standing to push that to the district court or to the Wyoming Supreme Court. So that's another unfortunate aspect of that.
Okay, very good. Thank you. Anything else? I bet you didn't get off this easy in front of the Revenue Committee. I don't know who's been there, but
No.
anyway. Anyone else? Anyone else? All right, anything else for the good of this topic? Still people in the room and haven't spoken. I know those are all health department people on that side of the room. No one else? Taxpayers Association, County Commissioners Association? Good golly. We've lulled you into your afternoon doldrums.
Mr. Chairman, I got a quick,
Senator Wasserberger, what's your question?
thank you, Mr. Chairman. Just a quick question for the Board of Equalization. How many cases do you guys have a year?
So the question as you're approaching is, how many cases do you have a year that make it to your doorstep?
Mr. Chairman, Senator Wasserberger, boy, it varies. It sometimes it's as low as 15 to 25. The last couple of years, it's been up around 35, 40, right in there. And a fair number of those are mineral tax cases, which are appealed from the Department of Revenue's assessments, because those are all state assessed. But the majority are the local tax cases, the local taxpayers and their appeals from the county board. So 30, I would say 30 to 40 if you took 10 years. And we actually have some, I think we've uploaded some statistics on that. It's certainly within our report that we file with the legislature each year.
Thank you.
Thank you, Mr. Chairman.
Thank you. Senator James.
Thank you, Mr. Chairman. I was just curious, how many land grant patent cases have you had come across your desk?
Go ahead,
Mr.
please.
Chairman, Senator James, since I've been with the board, and I've been there 7 years, since 2015, I can't recall one.
Can't recall one. Have you, Mr. Chairman,
Please.
have you ever heard of any land grant patent cases or ever heard of a land grant patent?
Mr. Chairman,
ahead.
Senator James, I've heard of them. I've read about them just out of curiosity. That's about the range of my knowledge on that.
Okay.
So I'm not intimately familiar with them, no.
Okay. Thank you. All right, anything further on this topic? Anything further from the committee? Pierre? Can she hear me? Well, invite her in. Then I'll find out if she can hear us.
Mr. Chairman,
Ms. Huxtable, how are you today?
I am great. Thank you, sir. Thank you for taking a moment to allow me to add a couple comments to what my colleague said. For the record, Dixie Huxtable, Converse County Assessor. And this information was in the packet that Pierre did, an outstanding report he put together. I just wanted to remind everyone there are a couple other compliance standards that the assessors must meet that the State Board of Equalization covers. Ken talked about the coefficient of dispersal, which keeps us grouped tightly, but there's also a PRD, price-related differential, to make sure that we're not overvaluing one side or the other. And while those are semi-technical terms, the glossary that he put together explains that. So while the sales ratio is an important and basic topic that everybody understands, there are other compliance features that we must follow that the State Board of Equalization monitors us with. So I just wanted to give everybody a little bit more reading if they want to peruse through that. Again, there's some more good information in that glossary. Thank you, sir. I'll take any questions.
Thank you, Dixie. Any questions for Ms. Huxtable? Any questions? Very good. Thank you, ma'am. Have a great day in Converse County.
Thank you.
All right, further business, further discussion. Seeing none, thank you very much to all that came for this topic. Like I said, that was a lot easier than the Revenue Committee, I'll bet you. All right, thank you very much. We'll give them just a moment because I know they're not going to want to sit through Medicaid fraud. Well, I don't understand why either, Director. Johansson, Jan Stahl, they're thinking, what do you mean? We had to sit through theirs. Thank you, Jeremiah. Well, we continue on, marching on. Thank you for the very complete report, Pierre. And now we're to Ms. Donna. Good afternoon, welcome.
All right. Thank you, Mr. Chairman. Good afternoon, Mr. Chairman and members of the committee. And yes, Pierre leaves big shoes to fill here. So the Management Audit Committee asked LSO to prepare a short report on Medicaid fraud and how it's investigated and prosecuted. And that's what I'm going to walk you through today. You should have the report in your meeting materials. Page 2 of the report provides an executive summary, an overview of the paper, and it also explains that states are required to return the federal share of recovered Medicaid overpayments, civil settlements, and criminal restitutions. Wyoming Medicaid is funded by 50% state funds, 50% federal funds, so this means Wyoming must return 50% of any identified overpayments or any recovered funds to the Center for Medicaid and Medicare Services. Page 3 is the introduction to the report, explains that the Medicaid program is a federal-state partnership, so Medicaid fraud as well. The investigation and prosecution of Medicaid fraud is a federal-state partnership. Medicaid fraud is prohibited by both federal and state statutes. The report lists 6 federal laws and the 2 Wyoming statutes that address Medicaid fraud. The 2 Wyoming statutes being the Wyoming Medicaid False Claims Act that establishes civil liabilities for fraud, and the Wyoming Fraud Control Act that establishes criminal penalties. The Wyoming Department of Health and the Wyoming Medicaid Fraud Control Unit within the Attorney General's office coordinate with a variety of federal entities to investigate and prosecute fraud, and these include the Centers for Medicare and Medicaid Services, the Federal Department of Health and Human Services Office of Inspector General, the Department of Justice, and the Unified Program Integrity Contractor, which is an entity that CMS, the Centers for Medicare and Medicaid Services, contracts with to conduct Medicaid and Medicare investigations and audits. The contractor, or UPIC, for the Western jurisdiction that includes Wyoming is a company called Qlarent. Pages 4 and 5 of the report provide more information about the 2 state statutes, the Wyoming False Claims Act and the Wyoming Fraud Control Act. The False Claims Act was passed in 2013. It authorizes the Medicaid Fraud Control Unit within the Attorney General's office that many refer to as the MFUCU. So if you hear me say that I'm referring to that unit. So authorizes the MFUCU or a district attorney to investigate Medicaid false claims and to bring a civil action on behalf of the state, and establishes the following penalties. Medicaid providers who submit false claims are subject to treble damages plus a penalty of between $1,000 and $10,000. Medicaid recipients who submit false claims are liable for the amount of damages to the state and a penalty of not more than $1,000 for their first offense. However, if Medicaid recipients commit subsequent offenses, they can also be liable for treble damages. The Wyoming Fraud Control Act was passed in 2019, and it codified the MFUCU in statute. Prior to that, the MFUCU had been created by a 1994 executive order. The Fraud Control Act establishes criminal penalties for 3 different acts. So either committing fraud or making false statements regarding Medicaid claims, accepting kickbacks or bribes in relation to Medicaid claims, or failing to maintain records of Medicaid claims. The criminal penalties under the Fraud Control Act vary from a misdemeanor to a felony, depending upon the act committed and the claim amount. And on page 5 of the report, table 4, you'll see a summary of those penalties and punishments. Then page 6 of the report summarizes the federal regulations that require the state Medicaid agency, which in Wyoming is the Department of Health, to detect and investigate Medicaid fraud and program abuse. These federal regulations define fraud as the intentional deception or misrepresentation resulting in an unauthorized benefit, and they define program abuse as practices that result in unnecessary cost to the Medicaid program. The federal regulations stipulate what the state Medicaid agency must do in response to suspected fraud or program abuse. So if a Medicaid provider is suspected of fraud, the Department of Health must refer the case to the MFUCU for investigation. If a Medicaid beneficiary is suspected of fraud, the case must be referred to an appropriate law enforcement agency. And if a Medicaid beneficiary is suspected of program abuse, the State Department of Health is required to conduct a full investigation of the case. Page 6 talks about if the state Medicaid agency, so again, I'm talking about the Wyoming Department of Health, determines there is a credible allegation of Medicaid provider fraud, the department is required to suspend all Medicaid payments to that provider to prevent further bleed of funds. However, the regulations do allow exceptions to that payment suspension requirement, such as if law enforcement, such as the Medicaid Fraud Control Unit, is conducting an investigation and they do not want to alert the provider of the investigation and they would like to catch the provider in the act of fraud, they may request that payments not be suspended. Page 7 also explains the Wyoming Department of Health's, that within the Wyoming Department of Health, it is the Program Integrity Unit that has responsibility for complying with these federal regulations. The unit has a staff of 8 full-time employees and a budget of approximately $700,000 and is funded by 50% state funds and 50% federal funds. Page 8 of the report explains how the Department of Health's Program Integrity Unit identifies and attempts to recover Medicaid overpayments and how they conduct preliminary investigations of suspected Medicaid provider fraud. Page 9 of the report explains that historically, Medicaid client fraud was referred to the Department of Family Services Eligibility Integrity Unit, but now the Department of Health's Program Integrity Unit is assuming responsibility for investigating client fraud. And they should, that process, that transition process should be complete by the end of this year. At the bottom of page 9, there is also information about the performance data that the Program Integrity Unit provided to LSO from state fiscal year 2016 through state fiscal year 2021. If you go to page 10, you'll see there's a chart or a table, table 2, that provides an overview of the dollar amount of Medicaid overpayments that were identified in those 6 years. That's row 1 of table 2. And then row 2 is the dollar amount of suspected fraud payments that were referred to the Medicaid Fraud Control Unit or other law enforcement. Row 3 is court judgments that resulted from civil and criminal cases. Row 4 is Wyoming Medicaid overpayments that were identified by the federal UPIC contractor, Cularent. And then row 5 are payments that were received from identified overpayments and civil and criminal judgments. One thing I want to point out, and the report points it out on page 9, is that it often takes a considerable amount of time for money to be recovered, either from identified overpayments or from prosecution of suspected fraud payments. So I think you'll see in table 2, the right-hand column, I provided totals for the 6 years to kind of see the cascade of money, money that's been identified as either an overpayment or suspected fraud in rows 1 and 2, what the courts have awarded, and then the bottom row being money that's actually been recovered from those court decisions. And I was told by both the Medicaid Fraud Control Unit and the Department of Health that it's often multiple years before we receive those monies back to which we're entitled. Then, let's see, pages 10 and 11.
So just a
I'm
moment,
sorry.
Donna, before you go on. So I want to be clear. So when we look at the totals column, that isn't all recovered. That
No,
is just totals. And so I can't take that number, it's almost 32 million, and divide it by 6 years and say $5 million a year gets recovered on average, because that's not the case. This is just identified amounts. Who knows how much we actually recover? Is that accurate?
That's correct, except the bottom row of table 2, those are monies that
Payments
received.
Okay.
Those are monies recovered.
Thank you.
Okay. Then at the bottom of page 10, I talk about the federal requirements that the Medicaid Fraud Control Unit must meet. The Medicaid Fraud Control Unit within the Attorney General's office is overseen by the Department of Health and Human Services Office of Inspector General. That Office of Inspector General also provides grant funding to cover 75% of the unit's program costs. The other 25% of funding comes from the state. Pages 11 and 12 provide more information about the Wyoming Medicaid Fraud Control Unit. They have a staff of 4 and a budget of approximately $400,000, again, funded 75% by federal funds. The unit receives referrals of suspected Medicaid provider fraud from a variety of sources. They receive referrals from the Department of Health's Program Integrity Unit as required by federal regulations. They also get referrals from their phone hotline and their online reporting system, and from their federal partners, such as the UPIC or the Department of Justice. The Medicaid Fraud Control Unit initially opens all cases as criminal investigations unless the case has been referred as a multi-state civil investigation. The unit reviews all cases for civil recovery to try and recover any money, any damages to the state before closing the case. And the unit collaborates with federal partners to decide whether to pursue the case in state or federal court. Page 13 provides some tables that all the data came from the Medicaid Fraud Control Unit's 2021 annual report. Table 4 summarizes the number of fraud complaints that the unit received in 2021. And of those fraud complaints received, the number of cases they opened, the number of cases they referred out, and the number of cases they declined. Then table 5 breaks out the 2021 investigative cases by criminal versus civil cases and by Wyoming versus multi-state cases. And then if you turn to the next page, page 14, table 6 breaks out those criminal and civil cases by provider type. And you can see all the different provider types listed in the left-hand column. And then finally, on page 15, Table 7 lists the criminal and civil judgments that were awarded and the dollars received from those. Again, it often takes some time before monies are recouped. So oftentimes the dollars recovered do not equal the dollar amount of judgment in that year. And then Table 8 breaks out the monies that were actually received from restitutions and penalties, breaks them out by state and federal share for the years 2017 through 2021. And then the last page of the report, page 16, is talks about a policy consideration that the legislature may want to look at. So the federal government provides an incentive for states to enact false claims acts that are modeled on the federal False Claims Acts. As an incentive for states to do this, the federal government rewards states by allowing them to receive a 10% increase in the share of monies that they recover under their state False Claims Act. However, the state act, in order to receive that incentive, the state False Claims Act must include a key TAM provision similar to the federal False Claims Act that allows a whistleblower to file a False Claims Act in state court. Currently, the Wyoming False Claims Act lacks a key TAM provision. Under our act, only the Medicaid Fraud Control Unit or a district attorney can initiate a false claims action. If the state were to consider amending our state False Claims Act to come into compliance with this federal incentive, we could increase the share of monies we recover under that act, the state share, from 50% to 60%. And now I'll stand for any questions.
Thank you. Any questions? Thank you for the report. Very good. Lots of information. Any questions? Yes, Representative Stiver.
Thank you, Mr. Chairman. On page 9, Program Integrity Unit Policy Performance Data. Am I understanding that right? From 2016 to 2021, there was only 13.5 million suspected fraudulent in Medicaid?
Go ahead.
Mr. Chairman, Representative Stiver, those are the numbers that the Program Integrity Unit provided to me for those years, 2016 to 2021. They identified a total of $3 million in overpayments and then referred out a total of $13.5 million in suspected fraud payments to either the Medicaid Fraud Control Unit or another law enforcement agency.
So it's actually, those two numbers are additive. 16.5, either between overpayment and or suspected fraud. So it'd be potentially additive. Is that accurate, Ms. Shippen?
That would be correct. Overpayments are not necessarily suspected fraud payments. They may just be administrative, an administrative overpayment that was identified.
Go ahead, follow up, Representative Stiver.
I'll take it offline, Chairman.
Okay.
Personally
All
talk to
right. Thank you. Anything else? Yep. Please, Senator James.
Thank you, Mr. Chairman. So I saw all these penalties and stuff in place for the facilities and that type of thing. I was just wondering if there's anything in place for government employees and other entities and such for accountability.
Go ahead, Ms. Shippen.
Mr. Chairman, Senator James, I'm not sure I understand your question. Are you asking if there are penalties for state government officials who?
Mr. Chairman, and other employees that may be involved within Medicaid. I'm talking about government employees.
Mm-hmm. I'm going to defer that question to either the Department of Health or the Medicaid Fraud Control Unit because I don't have that information.
Thank you. Any other questions? Representative Gray.
Thank you, Mr. Chairman. Do these, you talk about this, the key TAM, the ability for an individual to file these civil suits. Do these statutes cap how much can be rewarded to those people filing the civil suits, or does it say it could be the full amount?
Go ahead, please, Ms. Shippen.
Mr. Chairman, Representative Gray, I'm sorry I don't have the information in front of me. I believe the Federal False Claims Act establishes a percentage that a whistleblower can be awarded if they file the claim. And I have not looked at other state statutes in detail, but I would imagine other state statutes kind of follow suit and establish a percentage. So there's a limit to what a whistleblower could recoup.
Thank you. The Department of Health can probably add some clarity to that question. All right, further questions for Ms. Shippen? Thank you very much for a very complete report. We appreciate it. Further, Department of Health, you've heard a couple questions. Maybe if there's a volunteer that wants to respond to any of those questions. Even the director could come up. You notice that Ms. Mockler didn't have that trouble. She sent up somebody else. I don't know. How are you, Director?
Good afternoon, Chairman Barlow, members of the committee. Stefan Johansson, Director for the Department of Health. I'm joined to my right by Andrew Chapin, who's the Program Manager for our Program Integrity Unit. LSO and Ms. Shippen did a nice job explaining the overview of the program. Appreciate their working with us over the summer and really diving into the weeds of how some of these functions work. Probably not as weedy as your previous topic today that we all had the benefit of sitting through. But happy to answer those questions. In terms of the key TAM cap, I believe Representative Gray, if I may, Mr.
Please.
Chairman, I think the federal law and other legal folks can correct me is up to 30% of the total recovery could be awarded to the claimant, but I believe the number that I recall in a lot of these suits is around 10% of the total, but would have to double check that federal citation for you.
Please, Representative Gray.
Thank you, Mr. Chairman. I'm a little confused by these percentages because if you adhere to these 4 bullet points, then the federal government allows us to keep allows the state to keep an extra 10%. So then it will be 60-40. So who takes the 30 or the 10? I mean, is it up to the judge? Do they just decide they're going to take it equally from the state and federal share, or how does that work out generally?
Please go ahead.
Mr. Chairman, Representative Gray, it's a great question. I again, will caveat this and get back to you. My understanding is that the judge does decide. And so essentially you'd have the full amount that would be recovered, the percentage that is essentially allocated to the claimant on the key TAM side, and then that additional split would happen in this case if we elected to do the federal option of modifying the state statute to take advantage of the incentive, then the 60-40 split would happen where the state keeps 60%. Not to be overly simplistic, but I think from a policymaker perspective, the calculus that needs to happen is the juice worth the squeeze there. You'd see in the report that less than half the states have taken advantage of this incentive. I believe it's 21 or 22 states that are currently have that operational, and the remainder have not. I think in Wyoming, when you look at our numbers, that is a significant consideration of whether or not to take advantage of it, given what it would potentially cost in the key TAM provisions versus what the state would recover in an additional 10% of what's left over.
Thank you. There was some. Well, Senator James had a question about other folks who may be involved in some fraudulent activity. So I don't know if you want to take that up now, or we'll start with Senator Wasserberger if he has an immediate question.
Well, Mr. Chairman, are you ready for committee discussion? Or would you like to take more testimony?
Let's make sure we get all the questions answered and make sure there's nobody online as well. So just a second. So do you want to respond to the healthcare worker, the other potential players is not the right word, but participants in potential fraud? Would you speak to that just if you can provide some insight, please?
Mr. Chairman, Senator James, if it's okay, I'll defer that to Mr. Chapin, who's our Program Integrity Manager and expert in, and Senator James, I believe the question is, what avenue do individuals, government employees, healthcare workers have in terms of reporting potential fraud and what is taken? Did I understand that correctly?
No, I think actually he's concerned about some government employees who may be involved in the fraudulent activity themselves.
Oh, okay,
So
okay.
I believe that is that accurate? So that, I think that is what his interest is, you know, how does that get handled when it's a state agency potentially investigating state employees, et cetera? So you take
Mr.
that
Chairman,
up.
I will have Mr. Chapin weigh in on that.
Please proceed, Mr. Chapin. Welcome.
Mr. Chairman, Senator James, thank you for having me. As it pertains to fraud that may be perpetrated by a member of, an employee of the state, program integrity is dedicated to Medicaid fraud. However, we do participate in the statewide compliance audit, so the single statewide audit that every government program goes through with McGee, Hernan Pies. As part of that audit, there is an opportunity for those that are interviewed to bring forth any concern that they may have regarding fraud by employees of the state, in particular employees within the Medicaid program. So there is an avenue for folks to have their voice heard, but as it relates specifically to investigating potential fraud from an employee perspective, that is not our scope of work. It is dedicated to managing Medicaid fraud investigations with the Medicaid Fraud Control Unit for providers or beneficiaries of Medicaid services.
So that would be, so if there were something, an allegation, that would be referred to a local county attorney or district attorney's office. Is that accurate, Director?
Mr. Chairman, yes, and there's a variety of ways that things like that can be reported. It depends on the circumstance, but local law enforcement, county attorneys, if it's abuse and neglect, outside of the payment side, certainly Department of Family Services, et cetera. There's a variety of ways that would happen.
Okay, thank you. Senator James, follow up?
Thank you, Mr. Chairman. So I can't remember the exact phrase, but the statute that protects government employees from being prosecuted or whatever for maybe something like this, the Government Claims Act or something like that, that protects government employees. Would that protect the employee from this particular situation, or would that not apply?
Director, if you want to, knowing that you're not an attorney and not with the Attorney General's office, you can punt this if you like.
Mr. Chairman, Senator James, a slight punt, exploring that hypothetical a bit. I wouldn't want to weigh in legally on exactly what those protections are or aren't for government employees. But as Mr. Chapin mentioned, if the statewide audit suspected that state employees were involved in some sort of fraud, there would be legal mechanisms to follow up on that.
And I guess I would just add, though, and I'm not giving a legal opinion, that those protections only apply when an employee is acting legally within their employment bounds. So if they were doing something that's illegal, that protection would not be present for them. Would be my view. That is that protection is only for those who are actually doing their job appropriately, not for those who may be doing something illegally. Representative Stivar.
Thank you, Mr. Chairman. Does any of this data show your error rates in your cases?
Mr. Chairman.
Please go ahead, Director.
Representative Stivar, this report was specific on the program integrity side to the overpayment and program integrity issues. What I believe you're referring to are things like eligibility errors for folks that might not be eligible. It's a different side of the house. Happy to follow up and discuss those or give you that data.
Thank you.
Works for me. Thank you.
Thank you. So speaking of data and reports, et cetera, I can't remember, what's the name of the report, the all-encompassing report that the Health Department puts out? used to?
Mr. Chairman, that would be our health stat.
Health stat, is that
binder or-
still,
or
is that
Bible.
still part of your standing operating procedure?
Mr. Chairman, it is.
Okay, and is that available, like I said, is 2021's available on your website?
Mr. Chairman, yes, I will mention that program integrity doesn't have a specific health stat document for our performance management. But if it's okay, I would mention for the committees, or from my perspective, program integrity and these types of functions that are in the report and we're talking about today, it's one piece of a large puzzle that the Department of Health operates when it comes to compliance, fiduciary responsibility, et cetera. And it's really kind of the last stick, if you will, that if we had a ton of identified overpayments and program integrity was referring tens and tens of millions of dollars a year in this kind of context, it would mean we're doing a poor job in other areas of the department. For example, our payment policies, our provider manuals, our prior authorization and utilization controls that we have, in addition to things like third-party liability, where we have systems and responsibilities to identify other insurances that need to pay for that claim or that services or that service. So there's a variety of mechanisms that when you talk about program integrity and this type of issue, what Andrew manages is a very important function, and it's required both state and federal. But there's a variety of other functions that, in my opinion, are not to disparage Mr. Chapin here, but even better tools that we should catch things on the front end, do as much provider education as we can so we don't get to the point where we're making recoveries. Because as you see from the data, it takes a lot of time. It's a lot of effort to sometimes get a small amount of money squeezed out. Necessary and required, absolutely, but we try to use those tools on the front end to the best of our ability to prevent what you see here.
Okay, thank you. Yes, Senator James.
Thank you, Mr. Chairman. So my understanding is that fraud tends to happen a lot with the reimbursement side of it. And currently, and you guys have been working hard on this, and it's dropped in numbers, there are about 30 facilities that have not been reimbursed since about the beginning of the year. And like I said, you guys have been working hard on this and whittling it down. So with the facilities not being reimbursed, is there not a lot of room for fraud since they're not being reimbursed? And so there's a lot of room for error in there. A lot of room for bad things to happen. So, I mean, I'm just kind of curious on that whole payment situation that's been going on for this time period. I'm still getting phone calls from all these facilities about not getting paid. And that probably explains why a lot of these facilities are losing a lot of their employees to a lot of state facilities that are paying 3 times the rate, which is another issue, but we're on this right now. So, I mean, if we could probably pay them on time, that might help with some of this fraud issue. I don't know if this has been an issue before, but I know you guys are transitioning right now with your payment systems. But I've also been hearing that the fix is the same fix for all the different facilities. At least that's what they've been telling me. I don't know the system, but that's what they've been telling me. So why haven't we been applying the same fix across the board? Make sure that fraud doesn't happen. Thank you.
Go ahead, Director.
Mr.
I
Chairman.
think there's probably a couple of questions or a couple of things in there, but go ahead and get to
Yes,
them.
Mr. Chairman, Senator James, no, happy to answer all of those questions if I can. The issue that Senator James is referring to, just for the committee's edification, over the past 5 or 6 years, we have, as a department, procured and implemented a large-scale system change in Medicaid, what we typically refer to as an MMIS, or Medicaid Management Information System replacement. It's a massive project, and that a lot of the modules that we were implementing began to be turned on in the latter part of last year in 2021. Senator James is right. We did, in that implementation process, have a lot of issues to work through, as you would with any implementation like that. and a lot of providers having suspended claims or not being reimbursed in the timely manner they were used to prior. I am pleased to report, Senator James, since the last time we spoke, I believe in June, the vast majority of those issues have been resolved. Most of the issues that we're seeing in terms of the claims processing system are administrative in nature. And so I'm comfortable as director to say we're reaching that sort of, for lack of a better term, that leveling out of those issues that we would expect with any system in its life cycle. So that's a very positive development since we spoke last. And as you know, my team in the healthcare financing division and in Medicaid stands ready to assist any provider that's still having issues one-on-one. We're certainly committed to that. But make no mistake, you're absolutely right. There were issues. To your second question, to the extent that it relates to this type of Medicaid fraud and overpayment, I'm less concerned in that area, and not to sound overly simplistic here, but when we were experiencing issues where providers weren't being paid, we're certainly not making overpayments in that sense. So that I see them as kind of separate issues here, and maybe I'm not understanding the question correctly. So please correct me if I'm wrong. But I think in terms of what we experienced in the early part of this year and fixing those system issues, most of that has happened. And then I'll just mention, Mr. Chairman, kind of to the third point, part of that large system procurement, there's about a dozen modules, and part of what we have procured and what has been implemented, and ironically, what will soon be re-procured, are fraud, waste, and abuse modules that really do, as we implement this system change, they will make our office and our Medicaid program much more efficient in this type of program integrity work, using new technology and really limiting the kind of high-touch staff time that Andrew and his unit have to do when they work a case. We're really excited. It's not all there yet, but we're really excited in some of the technology that we have, which is a separate module from the system replacement you mentioned.
Very good. Thank you for working through those things. I'm sorry it was disruptive to providers who were caught in it. All right, further questions for the director, for Mr. Chapin? Further questions? All right, Senator Wasserberger.
Mr. Chairman.
What do you want to talk about, Senator Wasserberger?
Mr. Chairman, I'm ready to.
Oh, wait a minute. We've got someone in the back of the room with the Travis Kirchheffer. Just a moment. Travis Kirchheffer. Let's get a little more here with the Attorney General's office. I can tell by the blue tag that's the Attorney General's office. Go ahead, Travis.
Appreciate that, Mr. Chairman. Travis Kirchfer. I'm a Senior Assistant Attorney General and Director of the Medicaid Fraud Control Unit at the Attorney General's office. I don't have a lot to add as far as the report, but as to Senator James and Representative Gray's questions specifically, might be able to shed a little more light on those issues from the perspective of the Attorney General's office and the Medicaid Fraud Control Unit. I'll start with Representative Gray's questions because I think they're just a little bit shorter in response. As far as the key TAM statute caps, the federal statute has sort of a two-tiered structure that is, I believe, 10 to 25% for cases where a state has, or the federal government, in case of the Federal False Claims Act, has been involved with that case. So essentially what part of that key TAM provision that the wonderful report from the LSO talked about is that we'd have to have this tiered structure, and it gives us 60 days to decide whether or not we want to be involved in a case. In that 60 days, if we decide to be involved in a case, the key TAM relator would then be capped at 10 to 25% of the total reimbursement. If the office is not involved, if we just go ahead and say, you know what, press your luck, you can try to see what you can recover, the key TAM relator may recover up to the 30% amount. And that's at the discretion of the judge. There is a letter from the Centers for Medicare and Medicaid Services, I believe from 2018, that addresses the way that those monies are dispersed once they are recovered. And that's where I think, as Director Johansson talked about, there's sort of a question of whether or not the juice is worth the squeeze. I think that's why we didn't do this in 2013, is my understanding, because the relator's share comes out of what the state gets. As far as the federal government is concerned, if we qualify for the 60%, they get their entire 40, and then we have to take care of paying the relator out of the state reimbursement. I think there's some ways to look at that if we were to get more cases or if we were to get greater reimbursements or something like that. There's probably a wash point, but that's something that we would have to definitely carefully consider, I think, if we were going to add a provision like this. As to Senator Larson's questions, as to the administrative fraud, when we passed,
Senator James.
or
asked
sorry,
that.
Senator James, I apologize.
There will be a Senator Larson more than likely, but that's in the next
That's okay, I
legislature.
apologize. My head was just in a different place. The fraud in the administration of the program is something that the Medicaid Fraud Control Unit does have jurisdiction over. It's something we're required to have jurisdiction over by federal law. When we passed the Medicaid Fraud Control Act in 2019, we specifically included in that act that the Medicaid Fraud Control Unit has authority to police fraud in the administration of the program. And so that's a part of our authority. One of the other things that's part of our, through HHS OIG, Health and Human Services, we have some federal performance standards. And one of those performance standards is that we're also required to make program recommendations, either directly to the Medicaid program, the Department of Health, or when necessary to this body. And as a matter of fact, that's where both of the statutes that we're talking about today came from, were program recommendations from our unit. And that's also a very important piece of this puzzle, that if we were to see that there's someone in the program who's not doing their job, if there are pieces that are not being taken care of, I mean, we do this. I've made public comment on rules. We have made comments both directly to Mr. Chapin in his office, as well as in writing to the Medicaid program director, to Jan's immediate predecessor, Ms. Green, about additional issues that we thought were necessary in order to clean up some issues in the program. And so that's something we take very seriously, and that's something that we are involved in.
Thank you, Mr.
Thank
Chairman.
you, Travis. Senator James has a follow-up.
Thank you, Mr. Chairman. And when you made those recommendations, did they, how often did they implement them?
How
Go
often
ahead,
did
Travis.
Thank you, Mr. Chairman, Senator James. That's something we follow up on. Typically, they are implemented. There have been a couple larger ones that I think would require some sizable program redesign, such as we made a program recommendation a few years ago about direct responsibility for some direct support workers to the Department of Health in cases of fraud and abuse. And I think that's something that the department is looking at, but because of the size of the change that would be required for something like that. But that's an example of something that's out there. Certainly the rules changes that we've recommended, to my knowledge, have all been implemented. So they are taken very seriously.
Thank you. Thank you very much. Any further questions for Travis? Senator Wasserberger.
Thank you, Mr. Chairman. So you mentioned, so in the course of this research that we've done on this bill, you talked about the 2013 when Wyoming first started with its False Claims Act, and then I believe the governor had an executive order pushing it, and then finally the legislature closed that gap in, I believe, 2019 or 20. At any rate, you mentioned that going after the extra 10% or the 60-40 split between the state and the federal government might not be worth the squeeze. So my question to you is, if this committee should happen to direct LSO staff to write that legislation and then down the road work it and amend it and make it a committee bill, would you support that? Would that be the juice, worth the juice?
And certainly, Travis, you don't have to weigh on whether you support or don't think support legislation, but you can, relate whether you think it would be helpful for the implementation of both the agency's program and your ability to prosecute.
Thank you, Mr. Chairman, and I appreciate that clarification, because I don't feel like today I have the information that would be necessary to say, in the grand scheme of things, whether we would or would not support it. I think it depends on what's in the final legislation, Senator Wasserberger. I would say in some of the conversations I've had, I've talked to national experts about what that work might look like for us. I think ultimately it's a question of how we might reprioritize some of the work, how we might change the way we handle some of the false claims litigation that we do now in order to make sure that we're recovering and then we're not losing funds to any shift to relator shares. And so I think it's something we would have to take a closer look at and would look for guidance directly from General Hill before I made a comment specifically on any particular legislation.
Thank you. So I do find it interesting on Table 7, which is page 15 of the 16-page report, that state civil actions, it's 100% recovery. And then you get into the multi-state and the criminal process, I mean, of the claims, of the judgments, you get your money. Some of the other stuff, we get a pretty small fraction of it when it comes to criminal and multi-state recovery actions. So if you're responsible for those civil actions, keep up the good work.
Thank you, Mr. Chairman. And we are. That's something that we do take very seriously. But, the flip side of it is if we see someone, we're also responsible for the prosecutions. And if we see someone breaking the law criminally, there are additional considerations, including exclusion from the program and being brought to justice that also are a part of that calculus.
Okay. Very good. Thank you. Further questions? Anything further on this subject matter? On this subject matter, I don't see any hands on the screen. Anybody in the waiting room? No one in the waiting room? Thank you very much. Thank you, Department of Health. Ms. Stahl, congratulations, by the way. I don't think I've seen you since you were, I know it's been a while now, but I don't think I've seen you because I'm not on labor health anymore. So now, Senator Wasserberger, did you want to ask the committee to take up something, or you want to get some more information?
Well, Mr. Chairman, I'm not sure this is the right approach, but I'm going to move that this committee direct LSO staff to amend the False Claims Act to qualify for the federal incentive. Wyoming could retain 60% of the monies recovered under the act instead of the 50-50 split. And have that bill or the proposed legislation ready for the committee in October. Or by our last meeting.
So there's a motion to include the ability to, I'm not going to even try to say it. Anyway, enhanced ability. Is there a second on the motion? There's a second from Brown. And I know we have a very fine attorney over there taking notes. Did you need any clarification on the amendment or on the bill draft? No? Discussion on the suggested bill. Discussion on the suggested bill. Go ahead. Please, Representative Brown.
I seconded it for quick discussion here. I'd be curious if there's any dissension from the committee, mainly based on.
We're going to vote on it. What else do you want? Come on now.
I'd like to hear what the committee actually has to say on this. I certainly don't want to send our LSO staff down a hole of drafting a bill for us to turn around and, not vote for it. So if we have some discussion, I think that would be appropriate at this time. But I'd just be curious, and it looks like we've got at least one person willing to talk.
All right. Representative Stiver.
Yes, Mr. Chair, I'll be a no vote. I think we need to get more information on on the other states and look at this a little closer instead of just jumping right into this. I think there needs to be more discussion, a little more research done. I think they said there was 21 states that do it now. 22 states. And I think we need to look at this closer, and so
Okay.
I'll be a no vote.
Okay, thank you. Further discussion, Senator Wasserberger.
Well, Mr. Chairman, the reason for the motion is that under the federal incentive program, the states enact false claims acts or model on the federal False Claims Act may qualify for 10% increase in the share of monies recovered under the state. And I think that's worth going after, even if it's not all that much money, but at times it could be a lot of money. And there's nothing wrong with drafting the legislation and moving it forward and then making a decision down the road. And that's exactly what we're asking for here, is that that piece of legislation be available for us to discuss in the future and make a decision at that point in time. Thank you, Mr. Chairman.
Thank you. Senator James.
Thank you, Mr. Chairman. Does this at all affect how much the individual gets that brings this, like the whistleblower?
I believe this is completely separate from that
Oh, it's
issue.
separate, okay.
Different,
Thank you.
it's my understanding. But of course, if we get the bill drafted, it'll be done in consultation with the Department of Health and with the Attorney General's office. We'll be able to answer some of those questions. And hopefully, one of the questions we'll answer is, what increased recoveries would we have had in the last 6, 8, 10 years to get to Senator Wasserberger's point of, we may have had some improved recoveries. The other thing I would respectfully say, and I'll be supporting the motion to have the bill drafted, is we might have had 10 more referrals, because then folks that are aware of a fraudulent case would be able to bring something forward. As it currently stands, only the Attorney General or the Medicaid fraud unit can do that. So I think if you're looking for some way to further curb the potential for fraud, having citizens who become knowledgeable about it be able to make a claim has some merit. Now, whether it's enough juice in the whatever it is, whatever your fruit is, that's a different question. But anyway, further discussion on the motion. Further discussion? All right, seeing none. We'll try a hand vote since I have 2 people on Zoom. So all those in favor of the motion, please raise your hand. All those opposed? All right, the motion is adopted. So Ms. Sharp, that's your task. So if you have any concerns or questions, certainly you know who the right people are to talk to. And they're sitting out there in the audience. All right. Is there any public comment on this topic? Anybody in the room or online? All right. Yeah, so we're going to take we'll come back at 25 after. 25 after. Director Obrecht, I'm sorry now, Director, now I'm 25 minutes behind schedule, and you were here just on time for your appointed time, and I failed you. Thank you, Department of Health. So we'll take a 12-minute, whatever 3:25, 12-minute break. Thank you very much. All right, a couple housekeeping. I have a couple reimbursement request forms I need from a couple members. So please fill those out before the end of the day. Thank you. We're at that point in the number 8 on our agenda, not 3 p.m., 3:25 p.m. Director Obrecht, please. Welcome. Good to see you.
Mr. Chairman, thanks, and maybe my own housekeeping announcement. For those of you who haven't noticed the hum earlier outside of the northeast window, that's the exploratory work to repair the break in the hot water lines that's affecting the west side of the Capitol. Luckily, the construction management, state construction management was able to find a contractor who could do that without excavating the concrete, or believe they can at least. So we're hoping for this at least loud buzzing noise that we get a good result and don't have to tear up that concrete to fix those breaks. So
Very good. Thank you. They did give us, informed us of that this morning, that that's what was happening. But
that right?
now we're starting to see the action.
yeah. Mr. Chairman, I thought now would be a good time to touch base with this committee on the future of the LSO program evaluation function. As you all are aware, our administrator of that division, Abby Bodewins, left LSO earlier this summer to return to the Attorney General's office. And we also lost a program evaluator, Amanda Freund, whose husband is in the Air Force and was reassigned to duty in Washington, D.C. So we're down the administrator and an evaluator. And it seemed like a good time for us to reevaluate that function within the office before we decided on what our permanent next steps would be. Temporarily, former LSO attorney, document manager, Wyoming Supreme Court administrator, and a lot of other things. Lily Sharp agreed to come back in an interim capacity to act as the administrator for this division. But Mr. Chairman, I thought that given a new legislature and a new administrator taking over, it was time for the legislature to have a buy-in on what this process would look like moving forward. So what I would propose, Mr. Chairman, is that at Management Council's October meeting, I discussed this issue with them in conjunction probably with you, Mr. Chairman, about the possibility of issuing an RFP for a consultant to hire, to present you all with options on what you could, what this function could look like. Maybe have what we did in the Capitol Square project, which is a visioning session with stakeholders, with leadership and members of this committee on what this function should look like in the future, figure out what that would be, and then what that would look like structurally within LSO or with other options as well. So for the remainder of this interim, Mr. Chairman, LSO would not be able to have the personnel to complete another evaluation or to have one assigned to us, though the existing outstanding evaluation on state contracting is, the report writing is complete, and that evaluation is out to the agencies. And that is directly the work of Carla Smith and Clarissa Nord and Amanda Freund before she left, as well as Abby getting that report in shape, and then Wendy Madsen, once the report was written, is pinched hit and is helping on the final editing of that. But that will be presented to the committee at its October meeting, but at this time we don't have the ability to have another program evaluation assigned, though we certainly retain the ability to provide other products to this committee still, short reports or more in-depth research.
Okay, very good. Questions for the director? Representative Gray.
Thank you, Mr. Chairman. I want to dial down a little bit onto getting this evaluation finished up before the session. I've been on this committee 4 years and really wanted us to get going on those again. And so I think we'll finish up the one, and I'm hoping we can get it done by the session. So can you, my recollection when I went on this committee in early 2019 is there's like actually quite a formal process on completing this where we go into executive session. And I assume that's why we still have 2 meetings on the agenda to wrap this up before the session. And I just want to make sure, because I think it's been 5 years since there's been one, that we have sort of the institutional knowledge. Not sure the last time this was done, we're on the committee. I certainly wasn't. I think I'm one of the longest serving. So can you run through from T to green what we need to do, what the statute says, what the form has been? Because my recollection is going to executive session potentially and talk about some of this stuff with the agencies. Maybe we don't need to. I'm not a big fan of executive session, but I do think there's a process there. So what's your vision on how we wrap that up and make sure we get one done before the end of the year? Thank you.
Yep. Go ahead, Director.
Yep. Mr. Chairman and Representative Gray, I'll start, and then I think Carla Smith will fill you in on the particulars that I miss out on. But you will have the final report at the October meeting, and that will initially be presented in executive session. And then the committee will decide what portions of that report will be made public. And right now, the report is out to the agencies themselves so they can provide any feedback that they need on it. And then, Mr. Chairman, at the October meeting as well, you can propose any legislation you may feel is needed as a result of that program evaluation. And then that will then be drafted and discussed at the December meeting.
So yeah, please follow up.
Thank you, Mr. Chairman. Do you have a feeling on, I would like to be able to discuss legislation before the session, and as you know, in the process we usually use, it takes 2 meetings because usually we have a drafting vote. I mean, the chairman does have some discretion there, but how many weeks ahead do you think we'd get that in our inboxes, or would it be like right at the meeting on the table?
Director, and certainly Carla can weigh in if, Director, go ahead.
Yeah, Mr. Chairman, Representative Gray. So what would be the lead time on the report before the October meeting? And Carla will be better able to answer
Carla,
that
I
question.
know we've already spoken about this, but please go ahead.
Thank you, Mr. Chairman, Representative Gray. As it stands now, the 15-day statutory requirement to allow the agencies to see the report and respond before their official written responses due would be to October 5th. So they need to have their responses to us on that day. We'll attach it, we'll make any like tweaks that we need to do to get the cover and stuff ready. And then we're planning on sending that to you out on October 7th. That would give you 2 weeks to the day to the meeting on October 21st, when we'll have the meeting for your review of the report. As it stands now, it's about 35 pages plus a bunch of appendices, so it's not going to be a dissertation.
Thank you. Thank you, Carla. Director, anything? Did that answer your questions? Okay. Okay, anything further on the upcoming evaluation and report and timing? And if there's a strong need to move the committee meeting back some, we could take that up, but then we run into that second problem, which is a meeting in December right before potential session. So we'll try to keep the date, the 21st date for October, and then we'll have some flexibility for that if we need a subsequent meeting for legislation consideration. So, all right, so let's go back to the overall discussion of the Management Audit Committee. And then, Representative Gray, did you have comments or questions on that? Go ahead, please.
Thank you, Mr. Chairman. As you probably know, I'm not a big fan of these consultant things, and I understand their use, but going into some kind of RFP with 6 figures plus with somebody to give us something that I think we could probably, on a sheet of paper, kind of come up with the different ideas moving forward. I mean, and I understand your perspective, but let me ask you, in your view, and maybe part of why you want the RFP is probably to give some independence in the decision. And I understand where you're at on that, but what do you see as the buckets of possibilities out there?
So, Mr. Chairman.
Please, Director.
And Representative Gray, good question, great question. I think what the possibilities are, do we want to program a function that only does program evaluations like we've always had? Do we want to branch into different kinds of audits, different kinds of evaluations we haven't done in the past that other states do? That would be the first one. Second one is on how many evaluations and how many different kinds of audits do we want delivered in a year? And do we want the ability to do political subdivisions as well as state agencies? And then building out from there, what would the size of the in-house LSO team look like? Would it be more efficient to do it all in-house, or would it be efficient to do some of it in-house, some of it on a contract basis, or maybe all on a contract basis? I think those are the questions that need to be answered. You know, when LSO was first created in '74, there was actually two directors, one in the head of legal and one in the head of program evaluation. And throughout a long history at LSO, the evaluation function was seen as being as valuable, if not more so, than the legal function. And I think, especially, you know, since I've been here for the last 15 years, for whatever reason, has it been the Department of Audit in the executive branch coming forward? Has it been other reasons? Has it simply been that state government has gotten much more complex and our evaluation function has stayed flat or has atrophied on the number of people we have, but it's just not utilized to the extent that it had been in the past? And I would like the legislature to weigh in on that, on whether they want to keep the function at all. And if they do, what do they want that function to look like moving forward? And I just think, to your point, in a lot of these situations, it's better if you don't have me as the LSO director being the one trying to moderate that whole discussion.
Thank you. Further questions, further discussion? So to what the director mentioned, so we are going to go before, Management Council and just broach this. And we're broaching it. The first reason is because of where we are with our current staff and with, you know, an interim administrator, obviously very good staff who have been involved and continue to be involved, but our bench is not that deep right now. And so what do we hope it looks like, or what do we want to look like in the future? And are we willing to make an investment in that to make that happen? So I think that's where the discussion will start, and then we'll see where Management Council wants to go from there. Obviously, this current Management Council is only in place for another couple of months, and a subsequent Management Council can continue that discussion and see, you know, how they wish to proceed. The other thing to keep in mind is that this is a statutory committee. Unlike the 10 standing committees, Management Council and Management Audit are statutory committees. So if we want to adjust the functions, the duties, that requires also a bill. So somebody brings a bill to have that discussion on the floor. So anything further, Director? Any other questions for the Director? Representative Gray.
Thank you, Mr. Chairman. I just want to make a couple comments. I think I'm one of the longer serving people on the committee, and not that, I mean, it's turned over a lot, this committee. But my personal view is that a lot of the status quo, I think could work. I think we're not quite there. I think we need to get the volume up a little bit, and some of that I think is we're getting there, but I think the merging of this research functions with the program evaluation, I mean, the legislature is going to need the research functions no matter what. And so I think we keep it in-house, we continue to fill these positions with quality people, and then I think it's a little bit on the committee to continue to get better at providing direction as to what we're going to do, because that's the one thing I think that we have struggled with, is providing the direction on these evaluations. But I think that merging the two together, and the other thing that I think I'm very interested in is exploring the fiscal audits, which was very hot discussion in the committee in 2019, 2020, and then kind of got cooled a little bit. That is a little bit of a different expertise that would be brought into the office. But I think we're very close to getting onto something, reaching our full potential, or getting closer to reaching our full potential, and getting that mix of being efficient. And I think contracting this out, I'm not quite there yet. It's very important, but I think, maintaining this sort of in-house approach that throughout Wyoming's history we've had, granted with different models, I think is the way to go. But it's very important. I mean, I think it's very important we keep this. I think some of this is on filling these positions, and then also some of it's on the committee too, and I'm not pointing any fingers or anything. I think it's a collective thing where we just need to really provide clear directions on these audits, which I think there's been a little bit of a struggle with in the last 4 years that I've been on the committee. But I think there's a lot of great potential here, and I'm looking forward to this audit. It's the first full audit that has been performed in the 4 years I've been here, and I'm really looking forward to it. And I think it's going to be important for our state and continuing to improve the services delivered. Thank you.
Thank you. Further comment? Further comment? All right. Thank you, Director. Anything else that you would have for us?
Nothing from me today, Mr. Chairman. Thank you.
Right. Perfect. So for our fine staff who's taken good care of us all day, and research staff also who've helped us, is there anything for the good of the order? Carla, Lily, any of our folks? Nope. So we have one product still out there, and that is the audit itself. We will be receiving that in the next 10 days or approximately for review. And if you have, I think maybe the way we'll approach this, if there are things you find in the report that are, you have interest in having a bill draft, why don't you just let me know as the chairman? I'll get with staff and we'll try to get maybe just a couple working drafts worked up before we come to the meeting. So that way we can hopefully be a little further along in the process and maybe not need 2 meetings after that day, maybe just need 1. The other thing I want to keep in mind, and I've not been, like Representative Gray, I've not been through the release of an audit prior. Probably Senator Wasserberger probably was, but that was in a previous tenure of service that he did that. I've not been through the process where we actually do something in executive session and then come out and vote whether we're going to release it publicly or not. So that's one of the things I think there's some level of maybe sensitivity to that. And depending on the responses we get back from the agencies, that'll be part of the discussion. If they seem to think that everything's in order, no problem. Thank you for the generous guidance. That's one thing. If they are strong objections, then we may want to continue that discussion a little bit longer. So I have not been, like I said, I have not been part of that discussion before, as I guess, except for the Senator Wasserberger when he was a representative may have been, but I have not. So anyway, anything further from the committee? Anything further from the committee? I see Senator Guru is still on the line. Senator Guru, all is well? All right. No further business. I call this meeting adjourned. Thank you for all your attendance. And you will note from the time